All right, we're going to start the session on one of the canned presentations. And we're going to show how gaps with candlestick signals work very effectively. And basically, it boils down to that if we know what constructs or what the investor sentiment that constructs a candlestick signal, then we put ourselves into situations where we have high profit, high percentage setups based upon what should be the results after that signal. So just going back to the rhetorical, what are the signals and patterns looking for? We're looking for those setups for the big price moves. And if we understand what the signals and patterns create for us, then we're much better prepared for participating in that big price move. And those big price moves are stimulated by the four basic gaps. So the four basic gaps are very simple. First of all, you have a gap up in the overbought condition, or you have a gap down from a signal in the overbought condition. You have a gap up from a signal in the oversold condition. Now we got the full screen on here. All right, so if we see a signal in the oversold condition and a gap up, that's got strong implications. And if we see a gap down in the oversold area and see a signal, that has implications. And the implications are the two of them show force. If we see a candlestick potential reversal signal in the oversold area and they gap up, that tells you a lot of information. That tells you not only has there been a change of investor sentiment, but that new change is going to have great strength to it. Or if you see that candlestick potential reversal signal in the overbought condition and they gap it down, that tells you exactly what they did after that reversal signal. The other two show exhaustion. And this is the basis of candlestick analysis. Is what do the Japanese rice traders indicate or tell us where most people buy? They buy exuberantly at the top. So if we see a gap up and start seeing a reversal signal, start looking for a sell signal. On the other hand, where do most people sell? They panic sell at the bottom. So if you see a gap down in the oversold condition, start watching for a reversal. So if we know the characteristic or the nature of each signal, such as our doji, got the four dojis. The star doji is a small trading range, long-legged doji, big trading range, but closes at the same level. Dragonfly doji and the gravestone doji. They all have one basic characteristic, and that is there's indecision between the bulls and the bears. So visually, the Japanese rice traders have shown us where there's a potential reversal, and they've also given us some very simple rules to apply to each one of those signals. And if we just remember those simple rules, like if we see a doji at the top, it's time to sell. If we see a doji at the bottom, we need to see bullish confirmation. Otherwise, the Japanese rice traders say we could see more, or the weight of the market could continue to push the market down. They say whenever you see a doji, always take heed, because that means there's, for some reason, indecision between the bulls and the bears at that level. And this is the one that will make you a ton of money. The trend will usually move in the direction of how they open. I'm using the term the next day after the doji. So if we know that, and we know that we've had a nice uptrend and we're in the overbought condition, remember my stochastics are 1233 to above 80 is overbought. But if I see a gap up in the overbought condition, I'm starting to look for sell signals. And what's our simple rule of a doji? It's going to move in the direction of how they open it after a doji. So if I see a gap up doji and they open it lower the next day, where do you think my logical target is going to be? Back here to the T-line. Very simple rule of the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. So anytime I see that gap up, it's very simple. It's a warning that we've had exhaustion. Start watching for the sell confirmation. And if you see it occur right at a place that would tell you this is an obvious profit-taking area, like a gap up in the overbought condition, and they gap up and do a spinning top right smack dab on the 200-day moving average, what do we need to see the next day? We need to see them open positive and trade positive and tell us the 200 is not acting as resistance after that gap up. The next day, if they start selling it off, we want to be taking profits immediately. On the other hand, if we see that doji or a candlestick sell signal in the overbought condition and they gap it down the next day, that pretty much tells us exactly what their decision was after that indecisive trading day. Sound cuts in and out in Australia. Don't know what to tell you. Yeah. On the other hand, if you see a gap down in the oversold area, start looking for a buy signal. If you see a buy signal in the oversold area and they gap it up, that tells you exactly what's happened down there. Anytime I see dojis in the oversold area and they start bringing it back up, what's our very simple rule? You see a buy signal and a close above the T-line, the probabilities are pretty strong you're in an uptrend. If you see a doji followed by a gap up, remember, that's your best friend. That signal alone will make you a ton of money because it's telling you after the indecision, not only have they reversed, but they've reversed with great strength. Yes, the spinning top is the same as a doji. It just has a little bit bigger body, so it's not quite as, let's say, compelling or convincing as a doji, but it still represents the indecision between the bulls and the bears. Doji followed by a gap up. That's, again, your best friend. That will produce an extremely high probability, high profit trade. The gap up from any signal, there's our left-right combo, a good strong bullish signal. What are we looking for the next day? Positive trading. If they gap it up the next day, not only is that positive trading, but that's enthusiastic positive trading. And where do we want to be buying? In an oversold condition with a candlestick buy signal showing great incentive or great enthusiasm to get back into that position. We want to be buying immediately. Oops, this was a toss charts demonstrating. There's our doji followed by a gap up, our morning star signal. Remember, our morning star signal is a 3-day pattern, big down day, a doji. The third day needs to be a positive trading day, closing more than halfway up that candle. Well, if they gap it up and trail way above that halfway point of that candle, that's that much more, why can't I get rid of that little star thing? That's that much more information telling us they're coming back into that trade with great enthusiasm. Left-right combo followed by a gap up. Just good indications. The bulls have definitely turned this trend or trade around. Let's see, recent recommendation. This was a good while ago now. But notice the doji gap down in the oversold area. Then they gap it right back up again. Your abandoned baby, which is your one-day island reversal. And it's what type of, if this is a strong bullish move and starting your uptrend, what's it tell us about the whole pattern? It tells us we're probably on a J-hook pattern. There's going to be a lot more upside. So knowing what the signals are telling us on a daily basis gives us more control or more analytical, visual of what is happening in the whole pattern. So there's that doji gap up off the T-line, a J-hook pattern, slow curve pattern, telling us we're probably in the right direction at the right time. So anytime I start seeing buy signals, start seeing patterns, and I see the gap up, that tells me there's enthusiasm coming back into that position. That gap itself is information immediately telling you that the force of the buying is extremely strong. And obviously that's exactly where you want to be buying if you're putting yourself into a position in a position where they're coming in with great strength on the buy. If you do find a gap, but stochastics are in high level, above 80, you enter this position. Robson, that depends on what the pattern is, and we'll get to some of those here in a little bit. Does the color of the doji matter, or just the location in the next day? No, the color of the doji is not usually going to be significant because the body is going to be so small. The significance of a doji is telling you there's indecision, and that's the whole point of a doji, is to point out that there's indecision going on between the bulls and the bears. How they open it after that doji tells you what their decision was. So if we're seeing a strong left-right combo with a hammer booster, and then they gap it up, notice how the gap was very slight, but it told you they were still buying and trading positive the next day. That told you that was a very strong reversal. We are going against trend. Is that right? Yes, we're looking at the reversal signals, which is basically your signal, and then once that signal comes in, confirmation is the positive open the next day. Are these signals as significant for ETFs, indexes, as they are for individual stocks? Yes. Candlestick signals are not a measurement of any market. Candlestick signals are the accumulative knowledge of everybody buying and selling a trading entity, whether it's stocks, bonds, currencies, commodities, tulip bulbs, anything that you have fear and greed. We're identifying what's actually happening in that trading entity. Looks like you had nice volume. Yes, volume does come into play. A lot of people ask, well, do you want to see increasing volume as the price goes up? The answer to that is volume has absolutely nothing to do with price. If nobody's willing to sell that stock to you and people are willing to pay up for it, that stock can rise up on small volume. We're not buying volume, we're buying price. Now, if we do see a big volume day on the day of a reversal or the day before, the day after, that pretty much gives you a clue that there's been a definite change of hands. And that usually that definite change of hands is the smart money has bought from the panicking sellers, or the smart money is selling into the exuberant buyers. Oh, I forgot what you were alluding to in the first place, David. Oh, volume confirmation. Okay, yes. Yes, that's also, it's not a prerequisite, but it's an added confirming indicator that you're seeing a lot of change of investor sentiment right at a time where there's a reversal going on. Little hammer doji followed by a gap up. Stochastics curling back up. Just puts you in the right place at the right time. Oops. All right, I forgot to take out some of these. So the bigger the gap, what do we expect? Because the gap is a message that tells you there's great exuberance, what do we look for afterwards? This is a very common trend analysis, is that you're going to have what I call the 45 degree. Now, the 45 degree is usually a kind of a steady uptrend. It could be this direction or this direction. Still just call it a 45. Does the doji at the top, which is a sell signal, mean you don't wait for confirmation? You do wait for confirmation. Now, if I see a gap up doji in the overbought condition, yeah, I'll probably take off at least half my position, because that's telling me we've gotten to a high probability place where there could be a reversal. Now, could it keep continuing to go up? Yes, but if I take off half my position and I'm in an overbought condition and I'm seeing a gap up doji, the probabilities are pretty strong that there's a reversal occurring. So if I take off half my position that day, at least I can sleep well, because if it opens lower the next day, I close out the other half immediately. If it opens positive and continues higher, at least I have the rationale that I'm still in half a position in a high-risk area, but I'm still making money off of that trade. Yes. If you see a doji and a gap up the next day in an oversold condition, you start buying immediately. Now, immediately could be, I usually wait a couple minutes to make sure the bulls are still there, that it hasn't gapped up, and then immediately started selling off. On the other hand, if it does gap up and it start immediately selling off, then I just wait and I put my buy stop at the open. If it comes back up through there, it tells me that your quick profit taking's over. It's time to be buying. There's our message. This is what we call the message. Notice when it gapped up, it sold off. But the message was that it gapped up. Then what happened over the next few days after the profit taking was over? There starts your very strong uptrend. That is a very high probability setup because of the message. The reason I just call it the message is because there is a message there, and it's a lot easier to explain that versus explaining up, had a gap up, some profit taking, wait for the profit taking to be over. Just look for that to all to occur. Oh, Jim, yeah, Chris, check to see what Jim told you. All right, where do most people sell? At the bottom. If you start seeing gap downs in the oversold area, start looking for your buy signals. And it starts buying. What's our simple rule? We want to see a candlestick buy signal and a close above the T line. With the caveat that the further away you are from the T line, the higher the probability they're going to bring it back up at least to the T line. So if I'm buying here, I'm watching to see what happens once it gets up here, because everything's setting up that tells me it's time to be buying, other than the final confirmation that we should close above the T line. If it came up here and started showing sell signals, I'd close it out and hopefully come out with a little bit of a profit or a break even. And if I can get into a bad trade that's a little profit or a break even, that just improves my probabilities or keeps my equity build up strong. Very overbought at that point. Oh. It was overbought, but remember, you're buying the pattern. I'm guessing you're referring to this. This was the pattern, breakout. So just because you're in an overbought condition doesn't mean you're in a sell situation. Does your gap up strategy also apply to gaps formed by earnings move? Yes. Remember, the charts are the accumulative knowledge of everybody buying and selling during a particular time frame. And if that's also created by a large contract coming in, a world event, earnings, it's still what investor sentiment is telling you they've thought about whatever that announcement was. In this case, yes, I would not be waiting to buy until it got up through the T line. I'd be buying based on a positive confirmation and then see what it does at the T line. Remember, where do most people sell? They panic sell at the bottom. What's our strongest signal? A doji at the bottom followed by a gap up. So that's your one-day island reversal, which in Japanese analysis, candlestick analysis, that's called your abandoned baby. That's one of your strongest reversal signals. Whoops, what happened here? All right, so on all your signals, remember on a hanging man signal, what do we want to see the next day to confirm? You start selling. That's usually going to cause a downtrend. But if we see a hanging man signal, harami, and they gap it down, that's that much more convincing that they're going to start a downtrend. You've been getting left behind. Okay. Is there much of a difference in strength of a counter trend move and a change in trend? Well, it doesn't really matter. because you're going to be able to identify what the current move is, whether it's a major change of move or whether it's a pullback in a uptrend or a bounce in a downtrend. There will be signals probably at both ends of any of those moves. Vaughn will get to some live charts here after I get done with the can spiel. If you have a gap up within an uptrend, within a couple of days of profit taken, would you add to your position? If you have a gap up within an uptrend with a couple of days of profit taking, yes, that's probably your little J-hook pattern. Yeah, toss is think or swim. That's one of the trading platforms. Can TC2000 scan for candlestick signals, dojis, gaps? Yes, all of that. That's where most of our formulas went to in the years ago. You have a minimum gap you look for? No. No. If we use a 5 and 15-minute charts to these gaps and get those gaps, yes. But more than likely on an intraday chart, you're not going to get gaps unless there's something very severe happens during an intraday trading. So that's why you don't see gaps in Forex trading, because it's a continuous trading. Any comments on trading gap closing? Richard, rephrase that. I don't understand the question. So there's our piercing signal, followed by a gap up. And notice what started making this oversold. They started gapping it down, and then we saw that buy signal and a gap up. Very strong uptrend. A dark cloud usually includes a gap. Fill in the gaps. All right, I'll get to that. Yeah, all gaps, or did I say all gaps? The rule of thumb is all gaps get filled eventually. But we don't care about the eventually. We're only worried about what's going to happen in the current trend. If I'm buying on this one based on gap ups, I'm selling when the sell signal comes. Now if I decide to go short, now I have gaps to look for as a target or when the downtrend ends. The true gap is above any of the previous day's trading. However, if you have a gap up into a big shadow of the upper shadow of the previous day, yeah, they've gapped it back up into that profit taking. They're still probably taking it up. So very simple on where do we want to start watching for sell signals? When they gap it up in an overbought condition. So if you know that very simple rule, it makes it very simple to take profits. And if I see a gap up in an overbought condition and they start taking it up, I just put my stop at that open. Because logic says if they take it up and then they come back down through that open price after gapping it up, they're going to create some sort of candlestick sell signal. On the other hand, if they gap it up and immediately start selling it off, I put my stop at the previous day's close because logic says if they bring it back down through the previous day's close, they're probably going to do some sort of candlestick sell signal that day. Once a gap is established, does this create a new support or resistance? No. It does eventually, but probably not in the trade or trend that you're working at the time. No, I trade all time frames. I use the daily charts to analyze which way my overall trend is. And then if I'm day trading, which is usually in the commodities area, I'll be using the 10-minute, 5-minute, and 1-minute chart. If there are no gaps but just doji candles, what pattern makes this a high probability trade? Seeing which way they come out of that series of dojis. If you see a series of dojis, that tells you there's lots of indecision going on. If you see an uptrend with dojis, it tells you they're not trading that uptrend with any great enthusiasm. Have your stop below those, somewhere below those dojis. Okay, let's So if I see a dark cloud and a gap down, that tells me there's that much more force coming out of that signal. If I see a shooting star, especially when they've gapped it up in an overbought condition, I'm starting to look for sell signals. This would be a perfect example of if I know I'm up the overbought area and they've gapped it up and do a potential reversal signal, I'm closing out half my position. Oh, they're pretty much the same, Lorenzo. The futures market and the commodity markets are kind of one and the same. So if you see a shooting star and then they gap it down the next day, you definitely want to be out of that position and or going short on that position. There's that little shooting star followed by a gap down. And where they gap it down? Below the T-line. Tells you you're going to be in a strong downtrend. The gaps just give you very strong indication of what's happened after that indecisive or that candlestick reversal signal. Ned, I usually just use stops or not stop limits, because if a price is crashing down through the level that you want to be stopped out and they can't do it at your stop limit, so let's say your stock's trading at 52 and you put your stop limit in at 50, and all of a sudden they crash it right down through 50, it goes straight to 46, well, you might not have gotten executed at 50 because it went down through too fast, and so that means you're still owning it at 46. If it goes down through the level I want to be out of, I just want to be out of it at the best possible price. There's our inverted hammer, one of your strongest reversal signals, in the sense that if they open up positive the next day after an inverted hammer, and again, this is my unqualified, that's not right. Just my observations, let's put it that way, over the last 30 years, that if you see a inverted hammer in the oversold area and they open it positive, your probabilities of going positive are probably 95% or even greater. And it makes for a very simple stop loss. That if you take my word for it that it's a 95 or greater percentage of going higher, where should it go? It shouldn't come back down through this level. If it does, that tells you it didn't work. You close it out immediately. Do you counter trade against the daily trend when you in day trading? Yes, but I do it on the basis that I know that my overall trend is up, and that if I've taken some profits on a uptrend short term and it reverses, and I'm shorting it, that I'm a lot more, cognizant of when it bottoms out and close it out, because I know the overall trend is up, and I don't want to be holding on to something that's in an uptrend if I'm short. So I'm playing the short side with a lot quicker trigger. If there's a gap down, well, it would be weeks or months, followed by weeks or months of a fry pan bottom or a slow curve. You factor in the previous gap when setting your breakout point and upward target. Jay, I don't know if there's a gap down. Yeah, if there's a gap down, I'm out of the trade. Yes, if that's a fry pan bottom, yeah, I'm going to watch to see when when it comes back up through that gap down area. There's the ultimate of your inverted hammer, which is the Greystone Doji. And remember what our best friend is. A doji followed by a gap up. The more they gap up in the beginning, the higher or the stronger the strength is going to be in that uptrending or the new uptrend. Inverted hammer, gap up. There's your bullish harami followed by bullish confirmation. That's a good reversal. But a bullish harami followed by a gap up is going to give you probably a little bit more strength to the upside. So anytime I see a bullish harami, remember what a bullish harami tells us, that the selling has stopped. So if I see that the selling has stopped and the next day they gap it up, that tells me not only has the selling stopped, but the buying is starting with great enthusiasm. So I will buy immediately, especially if you're in an oversold area, being seeing a bullish harami followed by a gap up, that's a very strong indication. Again, very simple stop loss procedures when you're using candlestick signals, which is, if this was a bullish harami that gapped up, which way should we be going? Up. Where should it not close? It shouldn't close more than halfway down that bullish harami that told us the bulls were now taking control. When I enter a long trade after a gap up, I put my stop under the low of the gap up candle, thinking if it hits that stop, it's going to try and fill the gap. Would you agree? Not necessarily fill the gap, but probably going to be continuing the profit taking after that big gap up. Then all you do, again, because that initial gap up was a message, you come out of the trade and then you wait to see when the profit taking is over. How do you scan for doji and gap up? The scans are already there, VL. We put them on their service a few weeks back. So they're there, and I think we have all those scans. We've got all the scans for TradeStation, Thinkorswim, Ninja Trader, Metastock, TCNet. I know there's a couple more, and I think they're still working on E-Trade and some of those. Question above. Do you wait for the gap to close on the way up to buy, or use the top of the gap as your target once you have a buy signal? Or is the gap still relevant to your next buying or selling decision? Usually the gap is a target, and usually it's going to fill the gap. So if there was a gap down and it continued down and then I saw a buy signal, I would suspect that the first target's going to be is to the bottom of that gap, and then if it breaks through, then it's going to fill the gap. Yes, TC2000 or TCNet, Warden Brothers. James, I don't know the answer to that. That is something that you email Abraham at candlestickforum.com, and he'll give you that information. What service are you referring to? Oh, Sandra, I don't know. Oh, I'll have to look at Tazar either. Richard, yes. Email Abraham at Candlestick Forum. He's got all that information. They don't actually give me that information. That's all stuff that they work on in the background. So this is why we want to use candlestick analysis, because notice where this pullback came to, right smack dab to the 50. And what did we see at the 50? A bullish harami, which tells us the selling has stopped. And then they gap it up the next day. Not only gap it up after a bullish harami, but through the T-line. That tells us there's a high probability we're heading in that direction. Again, if we see dojis and hanging men up here and it's confirmed, we're going to have a downtrend. But if we happen to see that signal followed by a gap down, that's that much more compelling that there's going to be a downtrend. Or our Morningstar signal. This is what I call convergence analysis. And that's putting all the pieces of elements of analysis together, where we've got a doji right smack dab on the 50 in the oversold area. They open positive next day, and they trade up positive above the T-line, creating a Morningstar signal off the 50 through the T-line. We're buying on positive trading the next day, because it puts us in the right position at the right time. If Dow is overbought, and you see a gap down, does it change your strategy for individual stocks? No, it doesn't change my strategy, but it makes me more diligent to see whether the long positions I have are creating sell signals, or if they're trading back below the T-line. What are the dots on the candles of your pro bundle indicator? What are the dots on the candles? They may just be the recognition of the dots or the signals. Where would you place a stop after an inverted hammer? At the bottom of that inverted hammer. It shouldn't come back down through that level. Oh, man. When trading IRA, what gap up patterns are best since we have to hold 3 days? All of them, because usually it's going to create a good, strong uptrend. Back to slides. This one. Okay. The bearish harami followed by a gap down tells you the buying has stopped. Now they're anxious to sell. In Morningstar or any patterns, shall we have confirmation and bullish pattern? The close should be above the T line and then buy. Yes, if you're close. Well, my rule of thumb is if you're relatively close to the T line, you want to see it close eventually above the T line. What's relatively close? When you look at the chart and see what it's been doing in the past. If it's staying pretty close to the T line, that's probably, in this case, it's staying pretty close to the T line. When they start moving away from the T line, you can start getting ready to sell or buy if it's in an oversold condition. Carl, the gap strategy works with any stocks. Remember, it's not the stock that you're buying. It's the investor sentiment that is moving that stock price. I think there's it's not from us, it's the service, each service, Rick. You can buy the scans that you can use on their service. Plus, they seem to show more of a lagging indicator. Rod, I don't know how to answer that because most of I would put the candlestick signals as a leading indicator. Everything else is kind of a lagging indicator. Do the scans work really well, Steve? Let's put it this way, stock guy. Before candlesticks came along, or I learned candlesticks, I was the worst investor in the world. After candlesticks came along, basically it's just common sense put into a graphic depiction. I live very well at this point, and anytime I want to, I can pull money out of the market. In day trading, you use the 5, 10, and 1. Yes. What period do you buy and sell with? I look at the 10-minute chart, see if it's setting up, and if it's starting to set up, I flip to my 5-minute chart to see if it's setting up to also confirm the 10-minute chart, and if it's working, then I flip to the 1-minute chart for my execution to make sure that it's still moving in the right direction, to make sure the 5 and the 10-minute are still moving in the right direction. Let me flip through a few more, and then I'll get back to some of the questions. There's that Morningstar signal again. Oh, that's because we went backwards. Morningstar signal and a close above the T line. This is very simple entry and exit strategy. We see a close above the T line. What do we want to see the next day? We want to see that the bulls are still there. We don't want to see it opening down here. So if we know that this is a reversal signal, we want to see buying the next day. I would rather be paying up knowing I'm moving in the right direction than trying to bottom fish not knowing whether they've reversed it or not. Can we confuse harami candles and tops and dojis? Can we confuse? No, well, no, they can be more than one signal. You can have a doji harami at the bottom or a doji harami at the top. There'll be different signals, and there can be a combination of names for them. What moving average is the T line, the black one? The light or the blue line is the 50-day moving average. The moving averages on our charts are the 200, the 50, which is the blue, and the gray, which is the 20. They are all simple moving averages. And those are all used by all the major money managers around the world. All the big money uses those moving averages to make their decisions about their portfolio. I was asked the other day, how many days does it take for you to see a confirmation of a reversal? And the answer is none. If we see a candlestick reversal signal, we can be buying on confirmation the next day, which gives us two advantages. One, it gets us in early on a trend, and two, if that trend doesn't work, it gets us out very quickly with a small loss. Again, part of that cutting your losses short and letting your profits run scenario. Stock guy, I'll have to go to live charts to do that, to show you a day trade process. These are daily charts, but the only reason I'm showing daily charts is because these are the best ways for me to come up with the patterns. These charts, this could be a 1-minute chart, a 5-minute chart, or a 10-minute chart. They'll all look exactly the same. The dark blue line is the 50-day moving average. The black line is the T-line, the 8 exponential moving average. No, I don't think they do. I don't care about fundamentals. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And all we've got with candlestick charts is the graphic depiction of what's going on in human nature. All right, your strongest gapper is the kicker signal. Kicker signals, when they trade it in this direction, they open it here and close it here. The next day, they gap it up and move the opposite direction. They gap it up at or above the previous day's open and go in the opposite direction. Or the bearish kicker is you're in an uptrend. The next day, they gap it down at or below the previous day's open and go the opposite direction. And this is the strongest of all your reversal signals. The stochastics do not matter in the kicker signal. Anytime you see a kicker signal, there's been a dramatic change of investor sentiment. The probabilities of not only being an uptrend, but a strong uptrend are very good. And if they gap it up from the previous day's close, the bigger the gap up, the more compelling that next move is going to be. So anytime I see a gap up and they start trading positive, I'm buying immediately, because that tells you there's been a very strong change of investor sentiment. This is what we call the flutter kicker signal. Notice that we had a down day. The next day they gapped it up, but they only did a doji. But where did they do that doji? They opened this and closed it above the previous day's open. And what's our simple rule of a doji? They're going to move it in the direction of how they open it the next day after a doji. So if they open up positive, we're buying immediately, because what do we know? We know they're probably going to be moving up positive. And if they're moving up positive, what's that make this whole pattern? This is what we call a flutter kicker signal, because if you took out that little flutter, you basically have a kicker signal with which creates a very strong reversal. Same thing on the bearish side. If you see that bearish kicker signal, get ready for a very strong down move. So you buy a kicker signal immediately. If you see that gap up and they start trading positive, that tells you there's going to be a strong move to the upside. So essentially, the gaps give you high profit and high percentage pattern confirmation. Notice our big fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. And what do we want to see to break out that strong price move? Something that tells us the investor sentiment has really come back in strong. And if you see a gap up at the end of this fry pan bottom, that's going to start your strong uptrend. Same scenario with a dumpling top, which is the opposite of a fry pan bottom, a big rounding top. And what's this imply? If they're getting ready to slam this and you see that doji gap down, that's telling you that's the force starting that new downtrend. Let's see. Yeah, this is where we start seeing some of these little gap downs in the in the dumpling top. Tells you there's more selling coming. Or if you see the rollover, they can't get this up above the T-line and they gap it down, there's going to be a lot more downside. The opposite is the fry pan bottom. There's that kicker signal, your strongest signal telling you the strong uptrend starting, coming out of this fry pan bottom. This is more confirmation that this is going to be a very strong move to the upside. Anytime you see a gap up and then gap it down, there's got island reversal, expect that next move to be extremely strong. AC asks the video question when we get to the live charts. That gap down, notice the dumpling top, they couldn't get back up above the 50 or the T-line. Where do we start looking for buy signals? Down here in the oversold area when they start gapping it down. That's when you start looking to cover your short positions. Anytime they gap through a resistance level, notice our inverted hammer, doji gap up, then a gap up through the resistance level, tells you there's a strong force coming into that trade. Cyber, we've been trading for a while. Notice when it came out of this little fry pan bottom, what do? They gapped up through the resistance level, both the beginning of the fry pan bottom and the 50-day moving average, putting you in a position where you could see that the strength was coming into that trade. Netflix, again, there's our little doji sandwich, and notice what they did after the doji. They gapped it up. And notice how they kept gapping this up for a very strong price move. Gaps and candlestick signals are your best friends. You'll make a ton of money if you realize that the reversal signal is telling you when to buy, the gap up is telling you when to buy, and the gap up at the top is telling you when to take profits. This stock we just recommended again today because notice what this one did. This is VLTC. It started moving when it broke out in area with a gap up. It went from 1 to 22 in a matter of about 3.5 weeks. And then notice what we had up here. Shooting star, they opened it lower. Now they've pulled it back and they've come back up above the T-line. What's our next pattern setup? A J-hook. So if this moved up 22 points in this move, this potential move should take you up into pretty close to $32 or $35. Do you start to buy as a kicker signal is forming? Yes. If I've seen that it's gapped up above the previous day's open and started trading positive, I buy as fast as I can find the money and get into the trade. So this one we're recommending because it's had a strong price move, a pullback, and now a J-hook pattern in progress. What do we expect here? This wave here to be the same as this wave right here. Here's the message on when. They gapped it up, pulled it back, and then what is it telling you? They're still buying. The profit taking was over that first day. And notice what it did today. It was trading positive on a down day, 200 points down in the Dow. This one's probably going to have a nice 45-degree off of here. And we bought CVEO today. Because notice where this gapped up. Through the J-hook pattern resistance level. They gapped it up through this recent high. What's that basically tell you? But they didn't give a hoot that this was a resistance level. They went right through it. What's that tell us? This wave right here is probably going to be at least the same magnitude as this wave right here. And glue gapped up today. What do we know about a doji? That it's going to move in the direction of how to, it's going to move in the direction of how they open it. So if they open this positive, you want to be buying. Where would I have my stop? At today's low. If it came back down through there, that tells you the profit taking is in effect. Julian, we've got 3 books. I've written 3 books. The one that I would, there's Profitable Candlestick Trading, which is the first one, and then High Profit Candlestick Patterns is the meaty one. And then the third book was Candlestick Profits, Eliminating Emotions. And even though you might recognize all the patterns, know all the signals, if you don't keep your emotions out of your trading, you're going to kill yourself. And this is not a sage advice. This is the voice of experience. That even though I could see the patterns, I still let my emotions get involved. if you just use the candlesticks and get the emotions out of the way, you're going to make a ton of money. Again, that is from the voice of experience, because I was the worst investor in the world before candlesticks came along. And RKT, notice what it did today, a doji gap up. Kind of a spinning top doji makes this very simple. If it opens positive tomorrow, you want to be buying. The difference between a gap and a kicker. A gap is just a gap up from the previous day's close. A kicker is where it was a down day the previous day, and then they gapped it up above the open of that day and went the opposite direction. All gaps get filled, but they may not get this year or this decade. And I'm not buying something right now. I'm not holding this for it to come all the way back down to fill this gap. I'm holding this on the basis that the next move is going to be up until I see a candlestick sell signal. Okay, that's the end, except one little thing here. Pat's putting out we've got training videos on the gaps at the tops and the gaps at the bottom. And she's got a special going on where we'll do it for half price. There's the link. So there's lots of information in there. All right, I'm going to scroll up a little bit and see how fast I can answer questions. Also, yes, we also have on our website, candlestickforum.com, we've got, I think, up to 1,300 pages on information on how to use candlesticks. How do you play earnings gaps that gap up and then go the opposite direction? How do you know? You don't. That's why you let the chart tell you. You don't know which way it's going to go, but I'll get to a few of the earnings charts here in a few minutes. You see strong hammer and oversold. Oh, it scrolled right past me. And oversold, then in the next day or two it opens positive, and within seconds it starts selling and continues for 2 days. What is human behavior sentiment showing? That it failed. Remember, candlestick signals are telling you what's happening with a high probability. And that high probability, unofficially, may be 70% or greater that you're going to be in the right trade at the right time. But that still puts another element into your trading knowledge, which is approximately 30% of your trades aren't going to work. So if that's the case, what you have to know is when those trades aren't working so you can move out of them and move back to a trade that has a 70% probability of working. The more you keep doing that, the more you're going to be staying in positive trades and closing out losing trades very quickly. Don't look for divergence in MACD. MACD is a lagging indicator. I just have MACD on some of my charts just because it's added fluff. Yes, you use price and stochastics. Some people like to use RSI, but I found the stochastics are the best for me. Can you show a clear J-hook pattern? Yes, when I go to some of the live charts here in a minute. You have to wait until the end of the day to make sure that the gap up kicker signal has formed. Well, if it's already gapped up above the previous day's open after a down day, more than likely it's going to close positive on the day. I've seen many stocks at beginning, they start as a kicker. Probably you don't see many. If they've gapped up above the previous day's open, more than likely they're going to be trading positive. Very rarely will you see a gap up above the previous day's open and then it start fading right back off again. Let's see. Can you do a market analysis of today's trading so we have some idea of what to expect? Yes, I'll get to the live charts in a minute. I think the scanning softwares are compatible with Mac. Again, Sandra, email abraham@candlestickforum.com. Jim, you want to put Abe's address in for everybody? After Morningstar and intraday above T-line, do we buy intraday or after close to confirm close above the T-line? I usually wait for the close to confirm above the T-line. But if it's a doji gap up, yeah, you can be buying. And then at that point, I just make sure it closes above the halfway point of that candle. The bigger the bodies in a kicker signal, the more compelling that there's been a change of investor sentiment. Obviously, small bodies aren't that strong, but they are strong. No, when a trade does not work, it may be, if you're buying a position that's in the oversold condition and you see a buy signal and it doesn't work, you're still in an oversold condition. I wouldn't be shorting on a failed trade. You just realize that it failed. Now, just because a trade fails, you see a buy signal in the oversold condition and it doesn't work, you come out of it, you're still in an oversold condition. You look for the next buy signal. There's a lot of times I'll buy, close out, and then the third time it takes off. So those little small losses that I took was just the cost of doing business to take advantage of the position, or the advantage of the buying going on. What's your fastest indicator? Stochastics? No, the fastest indicator is the signal itself. The number one criteria for any of my buying is based upon the signal. Then everything else is confirming indicators. Stochastics is the next one. The T-lines is the next one after that. Then I see what everything else is doing or what everybody else is watching, whether it's bounced off of a major moving average or if the next target is a major moving average. So remember, this is just common sense put into a graphic depiction. And the reason we have these graphics is because there's only one aspect of investing that has stayed consistent for 400 years, and that's human emotions. And it's going to stay just as consistent for the next 400 years. So there's a very simple rule on Wall Street. If something doesn't work, it disappears very quickly. Candlesticks have been around for 400 years. And so the first assumption is that they work. So the next part of that assumption is we just have to learn how to use them correctly. If you want to swing trade and cannot watch the open or the market during the day, should I enter a market or a limit order? Jim, I usually put out a recommendation. I put out 2 or 3 recommendations each night, and I'll say buy if this price comes up through X. You can put your buy stops at that level, meaning if it comes up through there, it kicks your buy order in. Which stocks would you say work best for option trading with the gap system? All of them. The signals aren't discriminate as far as stocks, bonds. They work on everything. How long are the ebook specials available with a special offer? I don't know, Carol. No short-term time frame. Just whenever. Yeah, Steve Nissan. Yeah, started right before I did. I got some information out of his books, but the one thing that I discovered about his information was it didn't help me make money. And Steve Nissan wasn't trading. There's a lot different perspective when you're trading and using the signals than just showing the theoretical of what the signal should be doing. When you do your daily scan, which signal is your favorite? The number one, I've got a training CD showing the quantified. A lot of people ask, which is your best? Which signals work the best? They all work well, all depending on the conditions of the market. But I've quantified them, like the doji gap up is your best friend. That would be my most favorite. The left-right combo, followed by bullish confirmation, is the next one. Then fry pan bottom breakouts, J-hook pattern breakouts. what do you normally do when you have a stock that has already lost a lot of money? Olivia, you look at the chart and you say to yourself, is this a chart that I would want to be investing in? If the value of that trade or the amount that you have in that trade is X, you've got two options. You can leave it in that stock, which might not be the best place to have your money sitting, or you close out the position. Now you have that money to go on to something that's going to produce a profit. The problem with people, I say people, everybody, including myself, is if you have a loss in a stock, it hurts your ego. And what's the first thing that most people say? Oh, I'm going to hold on to this until it goes back up to where I bought it. That might not be for 5 years, 10 years, or ever. What you have to do is say, is this a chart that I would be buying today? If not, you close it out and you move on to one that you'd be buying. Go to my question at 8:49. J.P. Hayes at 8:49. Now I'll have to figure out where I started from. J.P. Hayes at 8:49. Okay. Why do some intraday traders close all their positions before the end of the day? I was told because of gaps in the next day trading session. That's up to each individual. I'm a swing trader, so I hold on to positions until I see a sell signal. If you're a day trader, that means you're going to close out your positions no matter what. So in our chat room, we've got long-term investors, we've got swing traders, we've got day traders, we've got scalpers. All the signals are going to work equally well on all time frames. I used to trade the E-minis off the 1 minute, 3 minute, 10 minute chart combination, and I have long-term positions that are based on daily, weekly, monthly positions. Okay, let me see where we are. Let's see. All right, let me do this. Let me flip to live charts. Hold on, I got to redo the projector. How do I get the trades that were recommended / executed today? Oh, I've got them right here in my day timer. Oops, I'm on the wrong page. All right, we'll get to live charts here. This is the Dow, and this is what our expectation was, not our expectation, but what we could kind of anticipate was when they failed the top of this wedge, the next target was the bottom of the wedge. So that's hard selling today was not unexpected. The NASDAQ, we could see, was coming back down to the bottom of the channel. So what's this basically telling us? One, we better see bullish confirmation or bullish harami, a hammer, a doji, or something right at this level, because if they start breaking this lower, that tells us they've now broken it. Now we're heading down for our next target. You recommend a good free service for candlestick charting? Oh, again, I think if you email Abe at Candlestick Forum, he'll show you how to get a trial membership. Yeah, and our membership, if you're new here, is every day the chat room is open. And starting in the morning, we've got a lot of people in there that have experience of finding good chart patterns. They'll put out recommendations. I'll come in, or I put out 2 or 3 stock recommendations each night. Sometimes in video, depends on how late I do it. But it's so that you can go to the chart and say, all right, why was this being recommended? Or the video will show you why it was recommended. So you're not just getting stock picks. It's more, why are these stock picks being recommended, so you can learn eventually to do all this on your own without having somebody show you what good charts are. This is all visual recognition of the price movements that prices move consistently. That's why there are patterns, because human emotions keep making patterns. Monday night, what is today? Thursday night. We do a session like this on Monday night just for members on our positions that we've recommended. We put out 2 or 3 stock picks each night. And then we've got about 30 or 40, maybe even more than that, trainings videos on the website that are discounted to members, like entry and exit strategies to improve your probabilities of being in the right trade at the right time, profit-taking strategies, how to do scans, option strategies, when is the best time to do spreads, when is the best time to be buying calls or puts outright. So those are the same things that you can get in video. We just do them live on usually a Wednesday or Thursday night so that you can ask questions. Again, if to get a free trial, Harold, email Abraham at Candlestick Forum. And let's see, was this this was the special tonight. There might be even a free trial in the special. I think they're working on correcting the J-hook pattern on toss. Daily videos have been covered up on the right side lately. I don't know. Sometimes that happens, but I think it's... I don't have the answer to that. Okay, let's take a look at a few things here. We had recommended Tahoe. I'm trying to find the J-hook pattern. Tahoe was a nice fry pan bottom. This is what we call the bobble. Notice how it came up and hit the 50, and then there was this rounding bottom, and where did it break out? At the 50 again. This tells us we got a big fry pan bottom. Our next likely target is up here at the 200-day moving average. Now, the reason we want to buy patterns is you can see what the results of this one was today in a big down market. The patterns have information built into it that is going to, remember, the candlestick signals and patterns are the accumulative knowledge of everybody buying and selling. They were buying this one today knowing that the market was selling off like crazy. So there was some other dynamic in this move versus just what the market was doing. We'll get to this. This was whiting, which we've been recommending for a long term because of the, now somebody asked earlier, do I use anything as far as fundamentals? On our long-term picks, yes, you want to kind of see why the overall pattern on the weekly, daily, and monthly are starting to build up. So we go to what research reports we can to find out what everybody's thinking is happening. The reason that we're buying whiting is because they're right up in the Balkan field up there in North Dakota, which they now are projecting is more as big as the Texas fields. And whiting oil is right in the middle of all that. So it's got the potential of a very strong move. It was heading up toward the $100 mark before all the oils got sold off. And the reason all the oils got sold off, obviously, was crude oil prices. And if we can analyze that crude oil prices right now is starting back up. And notice this is what our J-hook pattern is. Here's wave one. It pulled back, couldn't go through the T-line, so we're looking for the next wave to the upside. Our projection is up here to the $70 area, where the next resistance level at the 200-day moving average. Oh, Bob, I don't know. They've been trying to talk me into coming out to the Vegas Money Show. Those shows just aren't productive for technical traders. Let's see. Hold on. Let me go through I've got some that have some very compelling. This is their left-right combo, and notice where it's occurring, right smack dab off the 50. So the reason that candlestick signals provide so much information is what are they doing? What's the big money doing at the support level? They're buying. We're buying immediately because that signal told us exactly what was going on. ATRC was one that was pointed out in the chat room today. That's your kicker signal. Notice where this bounced off the 50. This one you want to be buying on positive trading because of this signal right here. Let's see. Can't even read my own handwriting. That's just great. UAN. Another one that had a little kicker type signal. Notice your big fry pan bottom, and notice what's acting as support, your 50. And a kicker signal. That tells me here's a wave 1, here's wave 2, probably wave 3 is going to be at least the same magnitude. Now, if somebody was asking about what is a J-hook, here's a J-hook where they take it up, a strong price move, consolidate, and we can tell it's consolidating because notice all the little indecisive trading days, doji, inverted hammer, doji, and then they start to back up. So this wave here and this wave here are usually approximately the same. And if that's approximately the same, where do you think it's going to coming out of here? More than likely up to the 200-day moving average. Is it going to break through? Oh, we saw a doji, bearish engulfing signal, a left-right combo. It was time to take profits. When's the time to buy? When we had this little fry pan bottom breakout of the 200, and now it's breaking up off the 50 with a kicker signal. You can be buying this one. Oh, I've got everybody way over time. We're probably going to be over time tonight. This will be a little bit longer. Another kicker signal. And if we make this chart smaller, notice what this has done. Here's your resistance level. Now they've just kicked up through it. Look for the next, what we call a 45-degree off of here. Nice steady uptrend. Kicker type signal, but they gapped this one up. Notice where they gapped it up through. This downtrending channel and the resistance level. Look for a 45-degree to come off of here. Cypress did a big left-right combo. Remember, anytime we start seeing dojis in the oversold condition, look what our convergence analysis tells us here. They went right down smack dab to the 200-day moving average. Stochastics were in the oversold area. They did a left-right combo after 3 dojis. A left-right combo that closed up above the T-line and above this downtrending channel. Where's your next likely target? Probably up, at least back up to the 50-day moving average. I'll get to LPI, Hannah, here in a little bit. We're going to get to the oils here in a little bit. Here's FO, Faro Corporation. Doji, after it gapped up, what's our very simple rule? It's going to move in the direction how they open it. If they open this positive, you want to be buying immediately because you'll have a big flutter kicker gap up situation. 45-degree is if they open this positive or on a big move to the upside. Let me see if I can think of which ones they were. Here's a case where on Amazon, when they gapped it up, moved up in a 45-degree, and there's a very simple rule of this trade. All you have to do is stay long until you see a sell signal and a close back below the T-line. Let's see, AVG, which is one of the softwares. This is where we'd expect a 45-degree. When they gap it up, look for it to kind of move in a steady trend up afterwards like this. This has told you there's been a big change of investor sentiment. Let me get to the oils here in a little bit. Ask that again when I get to the oils. Tile, there's a scoop type pattern. There's your inverted hammer. There's your gap up. I would expect a 45-degree off of here, or at least the trajectory of what the previous trend was. FCN, there's your kicker signal. Make this a little bit smaller. Oops, too small. Kicker signal, I would expect this to be a nice steady uptrend from here. Glue was another gap up today. Notice the fry pan bottom, gap up. Now if they open this positive, you want to be buying because that tells you they're probably in that same trajectory of what the trend was prior to the consolidation. And LKQ, same scenario as glue. And notice where this one closed today. They gapped it off the 50, did a spinning top doji. They open up positive. They're going to move in the direction how they open it after a doji. I would suspect this would be in the same trajectory as what the trend was prior to that. So again, this is not rocket science. We were buying the oils today because look what the oil prices are doing. They're still in an uptrend, probably heading for the up to the 200-day moving average. So as long as this move stays positive, you're going to see some of these charts. This is LPI that's had a fry pan bottom and doing another little fry pan bottom. Doji sandwich. Remember what a doji sandwich is. A bullish day, a doji, if it opens positive, this day and this day will usually be the same, which makes the prospect of this going right up to the 200-day moving average tomorrow. So even if you're a day trader, you've got things like a doji sandwich that you can pretty much calculate where your price move is going to be. We recommended CJES, because there's a J-hook pattern. And if it opened positive today and traded positive, what was it doing at this level? It was breaking out, making your target up here. And that same scenario was in another one that's been touted around in the chat room, SDRL. And notice the gap up today. Where did they gap this up to? Right up through the resistance level, which told us immediately they weren't caring about the resistance level. That told us our J-hook pattern was in progress. Our first target is testing this level, which would be the same magnitude as this move right here. And then if they break out through there, there's a gap to fill here, and there's a gap to fill here, taking you up toward the 200-day moving average. CPI is another one we've been holding for a while, and it's in a J-hook pattern. Notice it came out of the scoop pattern, and our scoop pattern is a flat handle, a pullback, and then the slingshot effect. And then what do we get from a slingshot effect? A strong price move. What do we expect after a strong price move? Consolidation and a J-hook pattern. The prerequisite for a J-hook pattern is that strong price move. RIG was one of them that we're following. That also has come out of this little cup and handle. You could be buying this one on positive trading tomorrow, because what would it be telling us about this level? That's not any concern, and look at our stochastics, still a lot of room to the upside. So over the next few weeks, they can take crude oil back up to $70. You're going to see a lot of these small stocks, oil stocks that have been beaten down. Here's Haas, HOS, little gap up today. Likely target the 200-day moving average. ESV, there's your J-hook pattern, cup and handle. Where'd they close? Above this high. Now look for somewhere up in this area. We're getting close to the 200-day moving average. And GOF, we were looking to go short the other day, but it did our little cradle type pattern down here. And remember, when you see a series of dojis, that tells you there's indecision between the bulls and the bears, and then there's your left-right combo. Now they gapped it up a little bit today and closed above the 50. Means if they open up positive and you have a doji sandwich, you're making this pattern start coming up pretty strong. Let's see. GeoDow goes up when the Dow goes down. What's you with that? Gold apparently was down today. Let's see. Those were the oils. Remember the message. When? Oh, this chart doesn't have it. They didn't do the split. The win gapped up and has been trading positive. Same thing with WX. They've gapped this one up off a doji. So what do you want to do? You want to wait to see when the profit taking is over and they start this up. That's when you want to start buying. On the NASDAQ chart, can we see the candlestick signal close below? Yes, this was a sell signal, which told us we were probably at least coming back to the 50, which it did, and some. So let's see. Let me think. Okay, all right. I'm just going to do a few here just to kind of silver was off today. So that meant silver wheaten was off. That's a doji gap down, which means if this opens lower tomorrow, you definitely want to be selling it or shorting it. Chipotle, notice the doji gap down. This is in a downtrend until you see a buy signal. Bidu was one that we shorted today because it had a doji gap down, and look what it did right here at the support level. It broke through that support. I bought the, I think it was the May 200 puts when it was trading right in here, because notice the pattern. This is your inverse of a wedge. This is what we call a spreading pattern. And now this move, now that it's broken the bottom of the wedge, the spreading wedge, could be a very strong move to the downside. VRX, you can be buying this one. It's got that little mini scoop pattern. There's your morning star signal right off the 50. You can be buying this one on positive trading. If I was buying this one on positive trading, then I just use the T-line as my stop. It shouldn't trade back below that level. Apple, you want to be short on this one right now. Well, it's right here at the support level. So if they open this lower, that tells us they could be bringing this all the way back down to the 200-day moving average. And notice what they did with it today. They gapped it down after your big left-right combo. Tazar. Tazar has kind of the message. All you can do with this one right now is stay long as it stays below the or above the T line. The bond prices are heading down, probably back to the 200-day moving average. It looks like it did a little left-right combo, so that means you could probably see a bounce back up to the T line. But you can see the dumpling top. I would probably guess they're going to come back and test the 200, which would be the same level as this low right here. Baba, nothing here, except you can probably get ready to go short if this opens lower. Tesla, you stay long because you don't have a sell signal up here. But you watch what it does once it gets here to the T line. Make sure that it stays above the T line. Price line, another one where you just stay long. You don't want to see this come back down through today's low. That'd be taking you back down below the T line. And Facebook, you had your hanging man close below the T line. I would think you're coming back at least to test the 200-day moving average. The light green line is our 3T. The T line is our 8 exponential moving average. The T line, the 3T line is a 3T, and that works better or starts kicking into effect when you see it the price starting to move away from the T line. The 3T line starts kicking in, so you can use that with a little bit better free refinement for getting in and out of positions. CELG, notice your big bearish engulfing signal at the resistance level. This is what we call a blue ice failure. It came down through the ice. It failed at the ice, couldn't find the hole that it fell through, drowned, going to the bottom of the pond, which is the next support level. And CLR, you stay long as it stays above the T line, but you obviously need to see this get up through the 200-day moving average. The left-right combo is a bullish engulfing signal following a doji. I'll see if I can find another one as we go along here. G-Pro, this one with the gap up. This is where I usually use the low of the gap up as my stop. But if it comes back down through there, the profit taking is going on. So right now, I'd be out of this position, but I'd just wait to see when the next buy signal sets in. Tesla, there was no signal on Tesla. So was that a kicker? Yeah, it was a kicker type signal. which means I'd probably be watching to see if it comes back down through the T-line. These are simple moving averages. The 200, the 50, and the 20 are simple moving averages. The T-line and the 3 T-line are the 8 and the 3 exponential moving average. Oh, I don't know whether I can show the, this is the S&P. Whoops, how did I do that? This is the S&P. As you can see, at the top here, it's right at the bottom of its trend channel. If it opens lower, good possibility they could bring this back down to the 200-day moving average. DDD, you stay short. Notice when they came through the T-line and gapped it down, I'd stay short until I see the buy signal. And Goog, whoops. Goog, you should be out of, or you should be short this one right now. More than likely, after they failed at this top, this could be your next target. And if the markets are heading down to the 200, that could go down to the 200. SB, I wouldn't be long or short this one. It's sideways. There's nothing here. Netflix, no. Notice where it hasn't closed. It hasn't closed below the T-line. Now, I'm out of this one right now because we started seeing sell signals, which meant where we were going to move back to, probably the T-line. Now that it's back here, I'll see if it holds the T-line, because if it starts curling back up, that means the T-line is going to act as support. MFT, nothing there to get excited about. It looks like a low-volume stock. Now, if you were looking, that's what I thought. You were looking for Microsoft. Microsoft I don't trade because it's too stodgy, too slow a mover. But right now, notice it broke out of this fry pan bottom, and it's in what you call 45 degree. If you like this one, you just stay long until you see a sell signal. Schlumberger, that's a J-hook pattern. There's your strong price move. This is what we call the bobble. The bobble is when they hit the a resistance level and they pull back, and notice what they did when they pulled back. They couldn't close below the T-line, and they pushed back up through. This makes for a very simple trade. If this opens positive tomorrow, you can be buying immediately because you have a doji sandwich, which the move will probably be about the same magnitude. That tells you you've broken out of your J-hook pattern. Here's wave 1. Wave 3 will be approximately the same magnitude. Let's see. Let's see. CELG. Yeah, you're looking for buy signals here to see if it's going to support at this level. Did I do price line? No, I didn't. Price line is still above the T-line, but if it's closed back below the T-line, it's pretty much telling you they didn't break through. They've got a double top. It's going to start pulling back. Oh, this one came back to the 50, and you're getting into the oversold area. So you start watching for buy signals here. And see, we did COG. I'll do a couple of these. ACS, that's not working. DPT, we've recommended for a while because of there's the bobble. Came up, failed at the 50, pulled back to the T-line, and there was a bobble. Came up through, told you you're an uptrend. More than likely your target is the 200-day moving average. Clean energy, there's your fry pan bottom. They're kind of a little quick J-hook. Now you're starting to get some exuberance. And when I'm in the overbought condition and start seeing the exuberance come in, I just put my stop at the previous day's open. It shouldn't come back down through that level. Oh, Twitter, you stay short. The bigger the signal, there's your big bearish engulfing signal, the more compelling that there's going to be there's been a change of investor sentiment. It's going to stay in that direction for a while. Let's see, was that CMGR or GMCR? This one's not real exciting. If you like it, you can be buying it, but it's still caught in a downtrending channel. There's not a whole lot of spark on this one right now. ACT. Oh, Sandra, it's not a name of the scannings. Or is it? Does it have a name? It's just all the scan formulas for whether you're using Thinkorswim, TradeStation, NinjaTrader, any of those. What did I just do here? ACT, you stay short. Notice how it's using the T-line as a resistance level. Under Armour, stay short. There's your kicker signal, back down through the T-line. More than likely, you're heading down to the 200-day moving average. Las Vegas Sands, you stay short until you see a buy signal. CI, stay short until you see a buy signal. CVS, another one. There's your slow curve. Get ready to short this one on any weakness, because that slow curve is very powerful when they start breaking it down. SSYS, there was that kind of slow curve. Notice your bearish engulfing signal right here at the 50, and they've never been able to get back up. They gapped it down. You stay short on this one until you see a buy signal. Cyber backed off a little bit today. It should have been closed out. I wasn't here to close my options out, but I will on weaker trading tomorrow. There was a lot of them that were showing weakness over the last couple of days. We closed out TSRO a couple of days ago. What was the other ones? I closed out a lot of the positions over the last couple of days because they had charts looking like this, where they were starting to roll over and closing back below the T-line. Fro. Fro, there's nothing here. I wouldn't be long in this one because you're still below the T-line. Nothing here. I would not be in this one right now. Kendai. This one, at best, you should be short. If it opens weaker tomorrow, you want to be shorting this one. And this one also has no trend to it. Matter of fact, you've got a big dumpling top. I'd be ready to short this one if it came back down through the open of yesterday. Amtor consolidated right back to the 50. Now, if it opens lower tomorrow, you close it out because it's going to come back to the T-line and do the little bobble. It needs to open positive and trade positive to stay in it. Because look where you are. You're right now smack dab on the resistance level, but you broke the two resistance, the 200 and the 50. AGEN had a good-looking chart. It's come back, but notice where they closed it today, right smack dab on the T-line. Makes this very simple. If it starts trading positive, you can be buying this one. Disney closed below the T-line, but it's in kind of a cup and handle. If it opens lower tomorrow, and again, that will be a function of which way the market opens tomorrow, I'd close it out and just wait for the next buy signal. Caterpillar, that's got a nice fry pan bottom and it's staying up. It doesn't have a great magnitude of movement to it as far as profitability, but it is in an uptrend. And U.S. Steel with the kicker type signal the other day. Today when they brought it up, they failed at the 50. You could still be shorting this one on weakness tomorrow. OPK. You want to be short on this one. You've failed up here, you have a left-right combo, you've got to have a double doji sandwich, and you pretty much broke this support level. You want to short this one on weakness tomorrow. NE, you can be buying this one on the J-hook pattern on positive trading. Amazon, this one has to stay positive above the T-line to stay in it, but it's already giving you the message. They've gapped it up. Now look for the J-hook pattern setup. Kroger, stay short. Kroger was a good example that you just stayed long as it stayed above the T-line. If you came out, you got back in. If you came out, you got back in. If you get out, you get back in. But more than likely, because they didn't hold at the 50, I'd look for your next target down here. Also, on a chart like this, you can put Fibonacci numbers on. Not that I trade off of Fibonacci numbers, but I put anything on the chart that tells me if I see a reversal, why did it reverse at a particular area, and if it was at a Fibonacci retracement number, I know that's why the buying came in at those levels. XBI, the biotechs are still getting hit. You can stay short on this one. UWTI, which is the crude oil 3X fund, nice big fry pan bottom, but you can be owning this one. That's that would give you, there's that little slow curve. You can be buying this one on positive trading. That's a good way to play the oil move if you don't like to trade the commodity itself. PTX, you stay short ever since the gap down. Ever since your big belt hold bearish engulfing, it's been in a downtrend. See, we did Tazar CMT. Stay long, but you did a hanging man. So if it opens lower tomorrow, you close it out because it's at least coming back to test the T-line. CRR, stay long on this one. Expect the 200-day moving average as your target. And Nagel, another energy. You buy this one on positive trading. The 200-day moving average being the next target. ExxonMobil, you can stay long. It's not a very active trader, but you can stay long. Pay, nothing here yet. This is why having the graphics of candlesticks helps. You can see that they kept topping it out right here. You can see you're in a wedge. I would not be long or short this, but if I wanted to go long, I'd put my buy stop right up here. But if it came up through that area, it would tell me they've broken it out. And CENX, nothing here. Matter of fact, looks like another slow curve. You can get ready to short this if it starts breaking down from this level. Crude oil, let's see what it's doing after hours. It's actually trading pretty flat, but here's your crude oil chart, which means you're in a J-hook pattern. They've broken out through this level. I would suspect you're still, we've been targeting the $70 range, which was the 200-day moving average. Boston Scientific did a bullish engulfing. There's a left-right combo. You had a doji followed by a bullish engulfing signal. So if this starts trading positive, little J-hook type pattern. BlackBerry, got toppy in here, close back below the T-line. If it opens lower, I'd close it out with the expectation it's going to come back and test the 50-day moving average. And stay short on AGU until you can see that the downtrend has still got this resistance level, and they still haven't been able to really take it up above the T-line. AMBA, following G-Pro, it closed back. It needs to, if you own this one, it has to open positive and trade positive. If it opens lower tomorrow, you can see the trajectory is now gone. Whoops, I didn't want to do that. Yes, I did want to do that. Costs. No, I want to do costs. Stay long on this one. There's that slow curve, doji gap up. There's your 45-degree in progress. Rosetta. Another one that you can buy on positive trading tomorrow, because there's your fry pan bottom, cup and handle. And if they open it positive, you've got a doji sandwich that's probably going to take you up to test this level right here. AK Steel. You're in a very slow uptrend, obviously. You can stay with this as long as it doesn't close below the T-line. Valero. Whoops. Valero, you have to be short this one right now. There's a blue ice failure, which means here's your next target. Walmart, you want to stay short. So you see a buy signal. Visa, Visa, I wouldn't be long or short. Well, I might be short this one right now, but the magnitude of movement on Visa isn't all that great. CMI, yeah, 3 white soldiers, but not real compelling as far as any major reversal. You're still stuck below the 50. You're still in this downtrending channel, and you haven't had a real powerful reversal signal. And even if it moves back up into this area, you've only moved 1%. Might not be worth the effort. Cypress we like. That's a nice left-right combo. Again, your doji followed by a bullish engulfing signal. The doji represents indecision. The bullish engulfing signal tells you what decision they made afterwards. An MDRX, you stay long. Don't want to see it close back below the 200 right now. That would put you back in the bobble. RXPX, you stay short on this one if you can. Yeah, you can be short this one. You can see how they did the belt hold. Another failure of the T-line. You stay short until you see a buy signal. And RDC, stay long on this one. Expect to test back up in here at the 200-day moving average. UPL, another slow curve. You can buy this one on positive trading, anticipating going up to the 200. This lumber liquidators, stay short on this one. Notice the big selling. They couldn't move it up. Now they've gapped it down again. They're going down to another level. And GTWO, ruh-roh. Did I do that wrong? That one's not coming up. Bobble, stay short. I'm sorry, Boeing, stay short. And BTU, nothing here to get real excited about yet. You can be buying this one, but you got to fight this downtrending channel. You could see a pop back up to the 50, which would still be a decent move. Did you buy CL? No, I wasn't here at the close today, but this will probably be recommended for tomorrow. Gold apparently was down today, so as you can see, there's no trajectory on gold. Okay, 2 more and we'll call it a night. Starbucks. Starbucks, you should have closed it out today because it closed below the T-line. If you own it, it has to open positive and trade positive. All right, the one that I would recommend, again, for higher risk traders is, notice what this stock has done. VLTC has gone from 1 to 22. Came back. Now it's back up above the T-line, bouncing off the 20. If this starts back up, the magnitude of this move and the magnitude of this move could be approximately the same. That means that they could move this up another 200% from this level. So with that, everybody have a good evening, and Tigers, no way, go Pittsburgh Pirates. So everybody have a good evening. We'll see you in the chat rooms. We'll talk to you all later.